What's going on, guys? It's Mr. DEBT, Joe Lorick from the Money Etiquette Group, and I really quickly want to talk about the recent IPO failures. Again, recent IPO failures. We often talk about Beyond Meat and the success, 500% over the initial pricing. We talk about the few wins this year, maybe 3 or 4 that performed where they went 50% over their initial pricing. But the majority of IPOs, especially within the last 2-3 months over this summer and beginning in this fall, have failed. They've underperformed, or they failed to launch altogether. I'm specifically talking about WeWork and Endeavor Group. You had 2 major companies. WeWork, if you're not familiar with them, this is a company that provides collaborative workspaces, but their business design is really difficult to get behind. We're talking about SoftBank, who backed them, initially putting out a valuation of the company at about $47 billion. And then when they opened the books and people looked at the company, that valuation dropped all the way down to about $10 billion when estimated from this different level of institutional investors. So we're talking about a $37 billion decrease, a devaluation, which usually isn't a good sign for an IPO being launched. So with all the changes, they're changing their structure with their CEO. They're talking about cutting work staff. They're really trying to get their expenses down. But this was not a great time looking at the recession that will be coming, looking at where the economy is. This was not a great time for WeWork to launch and become public. However, don't get it twisted. They will be launching an IPO, likely in late 2020, maybe 2021. So I do still expect this company to go public. But it's not going to happen right now. And to me, it's just another sign of something we've been speaking about, and that's just that investors are tightening up on their wallets, okay? They see a recession coming. It was in the paperwork that WeWork filed, saying that they could survive and they're ready for an upcoming recession. So everyone knows it's happening, but investors are starting to tighten up on their wallets. They're starting to say, look, we don't see profits in the foreseeable future, and we're going to move our money into a safer place. So WeWork failed to launch. Endeavor Group, and if you're not familiar with them, I'm talking about the group that owns the UFC. I'm talking about the group that puts on beauty pageants. They also are a talent agency. I believe they have like The Rock, Dwayne Johnson. They also have Stephen A. Smith signed under Endeavor Group. And also, if you're familiar with the TV show HBO Entourage and the character Ari Gold, his likeness and his character, or that character, is pretty much based on Ari Emanuel, who's one of the owners of Endeavor Group. So just to put that out there for you. But nevertheless, Endeavor Group just had a lot of debt. And not to mention, if you subtract and get rid of some of their debt, which they did a good job on this second part of the year, starting to decrease their debt. If you look at their books, one of the biggest issues they have outside of debt is that you have a writer's strike going on. And so when we look at the streaming landscape out there, how things are changing in the entertainment industry, and with the strike, it just doesn't seem like the right time to put out an IPO. Not to mention, when you looked at their books, they went from an $8 billion valuation to about 6.5. And for a company this size, that doesn't look good. Now, will they ever go public? I'm not sure about Endeavor Group. I know they did have a lot of ambitions and they wanted to do so for 2019. They tried twice. I'm not sure if in 2020 Endeavor Group is going to go public. I could see it eventually going public, but they have a lot of changes to make structurally before they can get into that. But mainly, I would say the biggest hiccup is they need the writer's strike to end. And I don't know when that's going to happen. I don't know when they're going to come into an agreement with the writers. But once that strike ends, you'll likely see an announcement that the company is going to pursue going public again, because honestly, the outlook is much better. But also, I think when we get more into 2020, we'll understand, when it comes to streaming, how that impacts the entertainment industry and what contracts need to be renegotiated when it comes to UFC fights, when it comes to movies, when it comes to working with certain actors and actresses. Talent, it's going to change how people perform and how people sign contracts and deal with each other out here in the entertainment industry. So those changes might dictate what Endeavor Group does. But again, with these failed IPO, guys, it's all pointing to a tightening of the wallet, which points to a recession coming. Okay? Beyond Meat, yeah, that still was a gamble. It wasn't like everything was guaranteed. Their books weren't perfect. They were in better positions than a lot of these groups, but they weren't in the best position in terms of finances either. But fortunately for them, they launched at a time where people felt like the economy was almost at the top. So they launched, their launch date was great timing. It's not just being a great company. They had great timing and looking where the trends are going, and people are saying, okay, you know what, even if a recession comes, people are going to eat. They also, of course, disclosed that they're going to try to work with McDonald's, and that has happened. So this is a company that's moving forward. You can see where they're expanding, and their competition wasn't great on an international and a domestic stage when we're talking about the United States. So it's a different type of company, but that doesn't mean that the IPO market is bleak. I'm not saying that the IPO market is a fail. Usually if you get into IPOs, it should be for long-term investments, not for short-term. Again, I said that in all my videos. This is not for people who want to just flip money, who want to day trade. If you're into IPOs, usually you should be into it because you're saying you're going to hold something for 15 to 20 years, and you believe that that company or that organization is going to be around for 15 to 20 years. Now, what does that mean for the rest of 2019 going into 2020? It means that more than likely you won't have big IPO launches. I was speaking about Robinhood as a potential launch for late 2019. I'm going to push that to 2020 for my prediction because the environment just isn't right. And then with some of the other ones we spoke about in previous videos, it's looking more like 2020 instead of 2019, especially with Airbnb. So let me know what you guys think. Do you feel like these failures of IPO launches points to a recession? Do you feel like it's just, you know, a business cycle and these companies were just overvalued in the first place, so they weren't worth investing in, and too many overvalued organizations tried to go public to kind of gain traction based on what happened with Beyond Meat? Or do you feel like, look, it's just people are tightening up their wallets? Me personally, I think it's a mixture of all, but tightening up their wallets, getting ready for the recession, to me is the #1 reason why these IPOs are not launching. But they will launch, just not in 2019. And with that said, guys, again, please leave something in the comment section. Make sure you subscribe to the channel and turn on your notifications because we have videos coming out multiple days per week, and it can be about anything from financial literacy to teaching children about finances to investing to IPO. So make sure you pay attention because I want all of us to win in 2019 and 2020.